in here first, I am an independent broker with Nirvana Funding Solutions, which is mainly focused on business funding, business loans, that kind of stuff. And then I'm a direct lender for the Nationwide Private Lender. We lend LLC. We focus on the residential and commercial mixed use space, 1 to 29 units, fix and flips, rentals, all that fun stuff. So we'll get in a little bit more into the programs at the end of this, but this is really going to be just kind of going step by step into a couple topics. So the agenda for today, and I also do want this to be a very open platform. So I know there's a lot of people in here who are interested in getting into lending, already in lending, already have experience with, certain situations. So if there's anything helpful that you guys feel you can share or want to share, please feel free to just unmute yourself and, say what's on your mind. So the first topic here is going to be the future of private lending and just the basic things that we're going to see moving forward in terms of just technology, improvements, security, all of that fun stuff. Topic 2 is going to be focused on securing that funding in today's real estate market and how the best way to do so. Topic 3 is going to be the best way to negotiate with a lender, just really with anybody, who you're trying to do business with. And topic 4 is going to be the do's and don'ts of working with lenders in today's market. So for anybody who doesn't really know what private money lending is, it's an alternative source of funding for real estate investments, and it involves borrowing money from individuals, different private organizations. It can be, insurance agencies, hedge funds, sometimes even banks themselves. So in recent years, it's definitely gained a lot more traction because, as we all know, banks are very stringent, they're very risk adverse. So it just creates an easier, more streamlined lending process for you guys. So has anybody here used or had an experience with private lending that they'd like to, kind of share or start us off with recently? Because I know there was a lot of questions or situations that you guys have experienced in the submissions that you guys put for the chat.
I've used a couple of private loans.
And who is that? That is
Adam.
Okay, so have you used anything recently?
Yeah, I have 2 that I'm using right now, I guess is the word, that a flip that's waiting to close and then a rental that's waiting for tenants to leave to start.
Okay, do you also, have you used bank financing as well?
To refinance
Okay.
out of the private money.
Okay. All right. So have you found recently that the banks are tightening up on the refis, or, what's been your experience there?
Both the private lenders have tightened up and the banks have tightened up.
Yeah. So
but you can't blame them.
Yeah, it's interesting. So as we move forward with 2023, the future of private lending is definitely going to be a lot more competitive, and in the sense that the demand for more flexible and customized financing options are going to be really important for investors, and that's going to be the way that private lenders are going to have to stay in business. So we're going to have to get creative. We're going to have to, figure out how to adjust to the rising interest rates and the property values and, all of these said factors. So with that, for example, like, there's a couple lenders, specifically the one I work for at We Lend, we're able to, underwrite deals to a 1.25 DSCR if it's a fix and hold. But on the front end, if you're going into a rental property and the DSCR is a little tricky, but you guys are going to be appreciating, we now have a new program where we can do it and originate the loan at a 0.65% DSCR. So there's more creative options that are coming about that you guys will start to see. So you're going to see more collaboration between private lenders and traditional financing institutions to provide more customizable loan options for you guys. So banks and financial institutions are partnering with private lenders to provide like syndication or co-lending kind of loans. So that's going to be interesting, and it's going to help everybody kind of spread the risk and be able to offer, some solid loans. So everything is coming about. We're also going to see the emergence of crowdfunding and peer-to-peer lending platforms. So I know somebody had questions about raising equity and that being an issue. So there's a lot of different ways to do that, but I believe in 2023, 2024, we'll see a lot of people kind of pulling their money together to fund real estate projects, and just a lot of internet platforms to be able to do so. There's already some that are pretty popular right now. So that's just going to make it more streamlined and just increase transparency and, make the lending process a lot easier since it doesn't go through any kind of lender. So we're also going to see the fun kind of security part of things. So we're going to see more integration of blockchain and smart contracts to increase transparency and efficiency. So it's going to be really important for you guys to have solid files, and just really learn how to put a good loan proposal together, how to put what lenders need to see, because there is going to be just a lot more technology involved in the underwriting process and the closing process as well. So any questions or comments on that? All righty. All right, so the next topic here is going to be my tips on how to secure funding in today's market. So we all know that this part is crucial. And the first step here is really going to be underwriting your deals as an underwriter. So it's really hard as an investor to look at deals like an underwriter because you're not, but now is the time where you really have to look closely and be creative. So you want to mitigate the risk, you want to maximize your returns, you want to make sure you're using accurate numbers that depict realistic outcomes. And understanding those outcomes on the front end really helps you kind of combat anything that may come up on the back end. So it doesn't mean to over analyze and, kill your deal by using large inflated numbers. It means really be methodical and really try to use market data to really support the numbers that you're putting on your performas or, when you're doing your ROI calculations. So conservative underwriting is crucial. You guys are going to end up avoiding overpaying for certain properties and just really have a lot of risk management skills in place when you do that. So the next part here, you really want to evaluate the lenders that you're working with. A few of you guys had questions about, lenders tightening up with certain loans, like they won't even do certain property types or certain loan structures, this, that, and the third. So whenever you're talking to different lenders, it's really important to look to see what projects they've completed in the past. Actually ask them if you have something similar and they sound pretty confident that they can get it done, then they should have completed something similar in the past that they can show you as a case study so nobody wastes their time. There's a lot of loan officers in this space because you have to remember loan officers are not underwriters. So they'll take on your loan thinking that they can get something done. They'll tell you that they can get something done, but until they're really talking to their team about it, it's in processing, it's being pre-underwritten, they don't really know. So if you have something tricky, make sure that that loan officer has put it in front of the underwriter's eyes before, you really move forward and you have that confidence there. So you want to understand their lending terms and their criteria. And the easiest way to do that is just to really read the loan matrix. Like we'll send you loan overviews, we'll send you a loan matrix. That's really the guideline that you want to work off of if you're working with a certain lender. If you have anything unique, you need to submit a really good loan proposal. So that really comes down to preparing a loan application that includes a detailed but financial, a detailed plan with financial projections. So when it comes to submitting a deal, nowadays, you want to make sure you have all of the information together. I highly recommend investors like just going online. You can go to Google and just type in loan proposal template. You know, there's AI that can really help you guys out with this. You know, but if it's a rental loan that you're looking for, or a fix and flip loan, or new construction, gather all the information that you can that's accurate, and put that on a professional letterhead along with what experience you have if it's your first time working with this lender, your ability to execute on this, and just really put it together. It may seem, okay, it's just a little $250,000 deal. It's not a big deal. I can just kind of throw this over. It's private money. It's hard money. It shouldn't matter. Nowadays, it doesn't work like that. If it's, you know, you really have to know, you have to show that you know what you're doing in order for your lender to take you seriously and, you know, get your loan closed. And that's just the the factors. And your loan officer should really help you put this stuff together. And that's what I'm here to do, is just give you what your loan officer should be telling you to do. The last step here for securing funding and continuing to secure funding is building your relationships with your private lenders by communicating effectively and delivering on your promises as an investor. So a lot of times, you know, I'm a loan officer, Tamara's a loan officer. We will really work hard to get you guys what you need, the loan, the numbers, you know, and it's important to continue to just update your loan officer, keep them in the loop, and just deliver on your promises, because they're humans as well. And if you have a tricky deal, if you have a fast deal, you need them to close ASAP, you want them to be ready to work for you and not afraid that you're not going to respond, or, you know, something of that nature. Just communicate. And that's the way to everything, you know, just be honest and open. All right. And then from there, we'll go over to negotiating with private lenders. So there's always room for negotiation, in a sense, if you understand what the lender's risk tolerance is. And that's going to come from a couple different factors here. So, you know, this is definitely a crucial skill just in life. And the first thing that it really starts with is understanding, you know, what you need to do to create a mutually beneficial agreement here. So this allows you, when you understand what their risk tolerance is, this allows you to prepare a loan structure that makes sense for both parties. So, you know, for example, if according to your numbers and your analysis, you know, if an interest rate of 10.75% increases your exit, and this may sound like jargon to somebody, this may not, but if it increases your exit DSCR to that 1.25%, it may make sense for your lender to honor a lower rate. Or if you're more comfortable paying 2.5% for origination, maybe you can structure that into your loan proposal and a lower rate. So there's ways to negotiate based off of the, you know, just understanding what your lender wants and needs. When you establish these clear communication channels and what your expectations are as an investor to your loan officer, this really helps with negotiating things, because negotiating doesn't even necessarily have to mean terms. You know, it can be you needing a super quick closing. It could be you needing flexibility on an appraisal. It could be you needing just an exterior only appraisal versus an interior only. So there's a couple different key factors here. So whenever you start your conversation with a potential loan officer, you really need to let them know what you need when it comes to communication, frequency, deadlines, and other milestones, because this is going to make sure that they can deliver. If you say, you need an update by today at 5 p.m. and they don't call you or text you back, that's somebody you're probably not going to be able to negotiate too well with. From there, there's the essential negotiation techniques, active listening, building rapport, and exploring alternative options. So when you're actively listening and you're paying close attention to what the lender is saying about loan structures, property types, you really want to make sure you're asking clarifying questions, summarizing different key points to ensure that you are, addressing all of your needs and concerns and their needs and concerns. And that's really important because that creates a dialogue and a back and forth and helps you understand them a lot better and helps them understand you. Building rapport is just building rapport. You just want to make sure that when your lender picks up your call, they want to pick up your call. It's not going to be a stressful, belittling experience pretty much, because a lot of times that can happen. So you just want to make sure you're on good terms with your lenders, because when you're good to them, they're good to you. Exploring alternative options and brainstorming and, putting out scenarios to your loan officer and just picking their brain to see how creative they can or cannot get is also another good method there. And then you want to just avoid the common pitfalls when it comes to negotiation. There's a lot of the main form of negotiation I see as a private lender is them, investors saying that they're able to get a rate and wanting the lender to negotiate and be competitive with that said rate, but aren't able to provide, a term sheet or any kind of proof, and are pretty much, wanting them to make something happen without understanding exactly how that previous lender was able to structure it, whatever the case may be. Another tactic that I see is just, being a little bit aggressive, making assumptions. You just don't want to go that route. You just want to make sure you're just decent to work with, decent to communicate with. People get upset. We understand that, but that shouldn't be happening on the negotiation process, because closing a loan can be a stressful process. So if getting the terms together brings out aggressiveness, that's just not a good sign, and loan officers are human. So these are what I recommend with being in the business, the do's and don'ts of working with private lenders in today's market, just to kind of summarize everything. So whenever you finally do get a lender who's able to close on a loan and able to successfully execute, do what they need to do, we would like to obviously see that you're going to do that as well. So during the process, if there's any kind of hiccups or anything that you run into, your loan officer should be your first line of defense. You should have that relationship established. So you want to provide regular updates on the progress. If there's any kind of delays, just make sure you're communicating. If your lender has a question or a concern, respond back. Simple as that. You want to be transparent about your experience and ability to complete the project. A lot of investors disservice themselves by, we understand a good deal. We want to get a good deal done. But sometimes the said deal is a little too out of, what you've ever actually experienced, whether it's on paper or not. So being honest about what you can and can't do really will save you a lot of time and a lot of energy. We ask for experience for a reason. It's not easy doing a $500,000 renovation when you've only ever done a $20,000 renovation in the past. So just be honest about that kind of stuff, and be realistic is my word of advice there. You definitely want to conduct your due diligence on the property and consider worst case scenarios in your financial projections. We don't want to look at anything in investing with rose-colored glasses. That is a way to look at it, but you also want to look at it with the blue colored glasses as well, and make sure it's a risk you're willing to take. That's what it comes down to. A lot of times we're hopeful with our projections, and sometimes your lender will even go along with your hopes. But things happen, and it's important to be prepared whether you want to think of those things or not. And build a relationship with the lender by communicating effectively, delivering on your promises. The don'ts are overstate the potential returns of a project or downplay the risks involved. That goes back to just protecting yourself. You at least need to really know what's involved, because your lender, your underwriter, is going to on the back end. So if you can, analyze that on the front end, especially if it's a tricky deal, and show them where the risk is and how you're comfortable with it and how you can potentially mitigate that risk. I mean, that really just puts you in a new light to your underwriter, and shows that you know your stuff and know what you're doing. So overstating is never, is never the way to go, because we'll see that it's overstated. You don't want to hide any potential issues with the property or your ability to complete the project, use any aggressive tactics, fail to honor the terms of the loan agreement or miss payments. Of course, you want to stay in good standings. And if anything does pop up, just communicate it, don't go ghost. And that really goes down to the last point here. So you just don't want to ignore, just not communicate effectively. And then from there, here are a few of the issues that you guys stated that you've been facing with private lending. So I just want to go through these. And if you recognize yours and want to add some thought to it, you can feel free to unmute yourself. So I saw credit checks, and I just assume that either comes down to the, more stringent requirements on credit scores, or how many times they have to check your credit. So nowadays, credit is really, really important to get deals done. There are some lenders out there that will go down to 620, but that's not going to be lasting. It's for rental loans, you're going to need a minimum of 660 for private funding. 680 to 700 is where you ideally want to be, because that's where you're going to get the reasonable terms. That's where you're going to get the best leverage, a decent rate. And one thing a lot of investors forget is that you can have credit partners. Like, you can definitely have somebody co-guarantee the loan for you. You can structure it in your operating agreement. And if they have higher credit than you, we can use that score. So that's also an option.
Mama is learning.
Let me see here. Okay. And then from there, my lender only needs one credit report per year. So there are a lot of lenders that need to check if you're doing volume. They need to check your credit every 3 months. So this is also very helpful because, hard inquiries are hard inquiries. You want to keep your credit strong. So ask the lender that question. That's a really good question. You should ask your lender, because if not, you'll never know. From there, there's the rising interest rates. Of course, that's a struggle 90% of investors are having. What you guys really need to do is just underwrite conservatively, with realistic rates, realistic numbers, and you work with professionals who will kind of hash everything and pre-underwrite your deals with you on the front end to make sure everything makes sense. Rising rates are rising rates. They're going to happen, and it's always going to be the case. They're going to go low, then they're going to go high. So knowing your options is really important. There's so many different loans out there right now. Like I said, we have the 0.65 DSCR loan. There's interest only permanent financing. There's different ARM options. There's cross collateralization. There's a lot of creative stuff out there. So we'll figure it out. You need a good loan officer, though, that's for sure, and a good realtor to help you out. From there, there's a lot of projects that aren't fitting lenders' risk tolerance. It's interesting but to see that the banks are really tightening up on the commercial side of things, the mixed use. So we're seeing a lot of that on the private lending side. A lot of private lenders aren't even doing, a lot of certain deals anymore. So with that said, a good deal is a good deal. And just a lender saying that they've tightened up or they're not necessarily doing these loans anymore doesn't mean they can't potentially find a buyer for them. So if you have a good deal, it all comes back to my point of having a really good loan proposal together. Because if it makes sense, it makes sense. And if your lender can help you at least get it funded, they can maybe point you in a better direction if they can't, but they at least feel confident in sending your file over that, you'd be able to get it done. So the more you really focus on that, the better if you're working on tricky deals. You also want to expand your network with investors in similar niches so that you can bounce ideas off each other. They have their network. So that's really important. And again, work with professionals. There is a question here about connecting with the right lender. I really recommend professional brokers for that right now. There's a lot of changing of the wind in the market. There's a lot of lenders closing down their doors. So working with a broker, if you're having a hard time connecting with the right lender, is a good start. So from there, there's the general market conditions. You want to diversify and adjust. And I believe an agent may have wrote this one about qualifying borrowers. I guess as, you're trying to, well, maybe a lender wrote that as well. But you just want to set your clear expectations, try to market to the right people. And if, they need some help, try to guide them in the right direction, look for opportunity to maybe refer them over to other services, and just try to be creative within, what you're getting. There's obviously the biggest issue for investors just kind of starting out is getting a really solid team in place. So you want to identify your needs, figure out exactly what you need to make your life work, your business work. You want to do your research, do your referrals from there once you have that structure of exactly what you need. You want to always check credentials and track records. There's a lot of horror stories of these contractors here in Philly. So just really make sure you're doing your due diligence and not just hoping for the best. And establish clear expectations when you do find these people, what you need, what you're looking for, and what you expect. The last question I had here was about raising funds. So there's different ways to raise funds. We all, we know this, it can be overwhelming, but the best ways to do that nowadays, are going to be through a broker, but you could also look into private equity, business funding, crowdfunding, and look into more like corporate social responsibility kind of deals where, the environment and the community is being impacted in a positive way because of your investment. There's ways to raise funds and a lot of equity and credits for that kind of stuff nowadays as well. Let's see here. All right. Now, I just wanted to make sure you guys have an overview of the kinds of loans that I offer right now. So at WeLend, this is where we're at. So this is where we're at in the market. These are products updated as of the last 2 days. So we have our fix and flip program. We have our ground up program, DSCR loans, and pretty quick closings, no tax returns, W-2s, very streamlined process. New investors and seasoned investors are welcome. So you guys can read through this or screenshot the details if that works for you guys. And then on the right side of the screen, you'll see my funding capabilities for Nirvana Funding Solutions, which is my independent brokerage. So Nirvana Funding Solutions just handles anything that's a little bit outside of WeLend's box. I still want to be able to help my clients whenever, things don't necessarily fit in their guidelines. From there, I do also offer business funding. So you guys can, read through these and just see if anything is of interest of you. So if anybody wants me to bring that back up or send that to them in a separate email, just let me know. Let's see. All right, so here is our summary. So does anybody have any thoughts or kind of questions about anything that was discussed or gone over here at this point? Or just what your, questions are about private lending?
As
I have
an,
a question. Oh, go ahead.
I was
No, go
gonna
ahead.
ask, if I've never done a deal before, how can I vet myself really as a new investor to a lender?
How can you present yourself as a new investor?
Yeah,
That's a great
yeah,
question. Yeah. So the best way is, well, there's compensating factors, right? So if you're a new investor, you just want to make sure you have as much of your ducks in a row as you can. So you want to call your loan or a potential loan officer, gather what you need to prepare, which is going to be just general stuff. You need to have your LLC set up. You need to have a business bank account and just a couple key factors there. From there, it does come down to the loan proposal. So just because you haven't invested before doesn't mean there aren't tools and resources out there that can help you make sure you're giving accurate numbers and accurate projections. From there, you just want to present yourself as you would for, a job, like a little cover letter. I haven't been in real estate. Maybe you've seen maybe people you've been around have been in real estate. Maybe you've taken some classes from a mentor. Maybe you've done some programs and what your current credit situation is and how confident you are that you can execute on this project. So if you kind of present yourself that way, that just really is professional. And although you're a new investor, you clearly have, the willingness and the ability to be organized and present yourself accordingly to be able to give your lender a little bit of extra oomph when it comes to their comfortability for funding. But realistically, you don't have to do anything too fancy. What I'm saying may kind of sound like a lot, but it's literally just a simple email whenever you're wanting to reach out to a lender to price a deal for you. Just having a decent summary together and not just an email saying, hey, I have this deal. It's a potential deal, 225K ARV, don't know the rehab budget, and just don't really have enough information, don't have your credit score in there, or maybe it's not accurate. You just want to be, present the deal nicely and present yourself for, what it is. And talk to your loan officer if there's things that you need to work on, or if there's things that that could really put you in a better light to get better terms. That's priceless. So if it takes a month of you figuring out a couple things, it's worth it. But it starts with a conversation, Braxton. I hope that helps.
yes, I hope. Thank you.
Well. All right. And Adam, did you also have a question?
I did. Do you have, so on a refinance and you have to fill out the personal financial statement, do you have a resource or suggestion that instead of having to fill out that same paperwork if you do 2 or 3 or 4 loans a year, is there like an electronic way that you only have to update the new deals that you have instead of go back and update everything each time?
Yeah, so I mean, I personally I have a general template, a personal financial statement. It's a very detailed, and typically if we need something updated, my investors will just, save that to their own personal file. And in a year, if we need a new personal financial statement, uh, they'll just fill in the blanks or whatever it is. But a lot of, if you're working with different lenders, some of them may require you to put your personal financial statement on their template, which can be frustrating.
Right.
But if you would like a template, I can certainly send you one that's pretty universal.
I would appreciate that greatly if you could do
Yeah.
that, because that's a huge pain each
Mhm.
refinance, I think, but
Yeah, I mean, so are you saying, is that with working with different lenders? Are you working with a couple different,
yeah, just because it
buckets? Mhm.
as they changed their, 6 months ago, they said that they were gonna do one thing, and now obviously things have changed, and now I have to find a different lender to meet, like,
Mhm.
an equity or wherever I'm at, and I have to fill out a whole 'nother financial statement, and
Mhm. Yeah, yeah. Oh gosh, and loan applications, all of that fun stuff. It's frustrating. But that's another, fun part about working with the broker is they'll typically handle that stuff for you.
okay, good.
So yeah, we do all
Yeah,
the dirty work.
if you
Uh-huh.
don't mind, that would be amazing if you could send that to me.
Yeah, I can do that. So if you want to pop your email or hmm, is that the best way? I don't know if there's a private message or let's see.
I did private message you my email to
Okay.
see if you could send me that loan sheet that you just put up.
All right. Yeah, that works.
Okay, thank you.
No problem.
Hi, Caitlin. Great
Hello.
presentation.
Thank you.
Well put together. Just a question. Do you typically work with borrowers or people needing capital that are non-W2?
Mhm.
You know what I mean? Like they either freelance or they just
Yes.
that's in this gig economy and they may not have a steady like W2, they may be 1099.
Mhm.
So I'm just wondering like what solutions you offer for individuals that fit that profile.
So that's our core clientele, actually. So we work with real estate investors and real estate investors only who are typically self-employed individuals who have funky tax returns and,
Mhm.
things look a little funny because of, deductions, all that kind of stuff. So we don't look at tax returns. We don't ask for W-2s. We don't ask for pay stubs. Typically, unless you're like a first-time investor, we don't really need to know what you do for income. We really just base everything off of your current liquidity and the project and your credit. And then obviously we run background, make sure all of that checks out. But we don't calculate anything when it comes to personal income or business income.
Great, great. That's
Mhm. Yep. So as long as you have the decent liquidity, the cash, reserves for the down payment and some, 6 to 9 months reserves, we're good to go.
And I do like that you mentioned negotiating because I mean I'm on the funding side. So I think that's something that's part of the education that people they just don't negotiate.
Mhm. Yeah, yeah, it's not
They
negotiation.
should. Yeah.
Yeah, so, but I've been able to successfully negotiate a lot of deals. It just really, you have to make it make sense. That's really all it comes down to. If it makes sense, okay, we can work with it. So, um, yeah, wonderful.
Thank you.
You're welcome. All right, any other questions? Let's see if there's anything in the chat here. Okay.
I
All
want to
right.
raise a question.
Oh, there is? Okay.
Yeah, are you available for a consultation after this or sometime?
Yeah, yeah. I mean, absolutely. So who's this, KJ?
Yes, yes.
Yeah. I will put my number up on the screen here. And you can go ahead and shoot me a text. Yeah, I should have done that for you too, Adam. So here's my email. You know, if you guys are interested in business funding, or have a different kind of deal, then reach out through Nirvana Funding Solutions. If you guys are interested in my funding capabilities that we lend, you can reach out at the information listed in the bottom corner. But yeah, if you want to shoot me a text, we can definitely set that up.
All right, thank you.
You're welcome. At the top, yeah, the 347-640. All right. So hopefully that was helpful. I will be, coming up with a couple different webinars here soon. I might underwrite some live deals I'm working on with you guys, just so you can see how I'm structuring them. So just keep an eye out for different events. Like I said, this is the first of many. So hopefully I wasn't babbling too much and you guys got some good information out of this. And yeah, any other questions, you guys just reach out to me. Okay, so we'll go ahead and wrap it up and call it a night and get back to business.
Sounds good. It was
Thank you.
a
Thank you.
great evening.
Appreciate
You're
it.
welcome. Thank you guys.
Thank you.
Of course.
Thank you.